This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on September the 4th, 2014. Our time is 8:49 in the morning Mountain. Our radio show runs on your favorite radio stations. Also, the shows are archived on Harold's websites, HESradio.com and rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. You'll find the podcast there. You can subscribe to it. We are portable. We go anywhere you do. Our radio show is portable. Harold's website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number to speak with him personally and privately is 1-800-432-1022, 1-800-432-1022. 1022. His auction site is hsfineauctions.com. As we tape today's show, in the Euroland, the EU has cut rates. They are fighting serious deflation. And we'll have to wait and see. Will they go to quantitative easing, printing money, buying bonds? A lot of people think that that's exactly what they need to do. We'll have to wait and see what Mario Draghi says later today. Also, geopolitically, ISIS beheaded a second journalist. I know a few weeks ago, there was a senator who came out and said that they were targeting a building in Chicago. They felt that Chicago might be a target and they could go after a building in Illinois. Harold, I'll tell you what's happening in the world today, not only financially but geopolitically, is all pointing to having an insurance policy in your portfolio of hard assets, gold, silver, diamonds. As we've said before, you can't buy the fire insurance after the fire. You need to have it before the fire, and that's why we're advocating hard assets at all times in every portfolio today.
You bet, Randy. Again, these are not normal times, so this ISIS group is very, very concerning. You know, there's a lot of concern about this group. They're very well funded. They're much stronger than Al-Qaeda was, and they seem to have this tremendous hatred, and it's a frightening situation. Some people believe that they're already here in the United States, that they got in through Mexico type of thing. There's all these other stories happening that they have hijacked planes and have them, put in reserve type of things. So these are the reasons that we've been always talking about alternative assets, assets that are outside of the system, not paper assets like stocks and bonds and mutual funds and those type of things. Obviously, those are important. Obviously, most people invest in those. I'm not a fan of those in this type of market situation, primarily because, again, I've been in the investment business 35 years, and I've seen what happens to these type of investments when they go bad. And you've seen it many times yourself. In 1999, you saw what happened to the stock market and the NASDAQ. The NASDAQ dropped from 5,000 down to 1,000. In 2008, the Dow dropped from 14,000 to 6,500. The TSX dropped almost the same amount. So, when these type of situations hit, and if that's where all of your money is, that's why what happened in 2008, bankrupt most people. And a lot of people couldn't hold on to those stock positions because a lot of people leveraged their positions and they ended up getting wiped out. In this type of dangerous market situation that we're in right now, it doesn't make sense to take unnecessary risks. If you're in your 60s, 70s, 50s in this area and you lose your money this time around, and I'm pretty positive that we're going to see another massive drop in stock and paper assets, it's very, very difficult to make that money back again. The fact is that interest rates are extremely low right now, but they're keeping interest rates low. When I say they, the Federal Reserve is keeping interest rates low because it's promoting business, it's helping Wall Street. But the bottom line is that inflation is creeping in. And they know inflation is here. You can see it in the food prices, you can see it in the oil prices, you can see it just in everyday living. And the fact is that low interest rates and inflation are the opposite of each other. In actual fact, when you have high inflation, as we're heading into, the idea is to raise interest rates. That's what's always been done. Back in 1980, when we had double-digit inflation, we also had double-digit interest rates. It means that interest rates went to 22%, all the way up to 22% just so they could get inflation under control. And what it basically means is that if all of a sudden the inflation numbers show that it warrants raising interest rates, and the Federal Reserve starts to raise interest rates, it doesn't mean as soon as they raise interest rates that all is going to be well. Look at what happened back in the early 80s, is that interest rates were actually fairly low, just like they are, not as low as they are now, because the situation wasn't as severe. But as they started raising interest rates to try to get inflation under control, they had to raise it almost every quarter. And it started off small at 0.25%, but then it went to 0.5% and then a full percent. You can imagine that when interest rates went to 22%, what it did to the economy. Who could afford to buy a home and pay a mortgage at 22% interest rates? Who could use credit cards or anything like that? So, again, we are heading right back into a similar situation. You know, we started recommending gold and silver and hard assets and alternative investments back about 14 years ago, when most people weren't even thinking about gold as an investment. They weren't thinking that oil would make those type of moves. Oil was at $18, but we were convinced that gold and silver at that point were about to start to move. There were several reasons for it. One of the biggest reasons was 9/11. And 9/11, the sheer cost of 9/11 and all the negativism that went along with 9/11, the fighting in Afghanistan that followed it, and in Kuwait and everything like that, just made everything so expensive. And you saw what happened to gold. Gold went from $250 all the way up to $1,900. People literally made fortunes on that move. Silver went from under $4 all the way up to $50. A lot of our clients made fortunes on those moves in gold and silver. Oil went from $18 all the way up to $150, and we also caught the euro. Now we've had 3 years of sideways to lower markets. You know, the fact is that nothing fundamentally has really changed in the market. What really changed in the market was the philosophy, the thinking of investors, because all of a sudden, with trillions of dollars going back into the stock market was a viable investment. And it went from 6,500 all the way up to 17,000 that it's at right now, probably the biggest move that the Dow has ever made. The problem with that move is that it had nothing to do with the economy. It had everything to do with putting trillions of dollars into the market to try to get people working again, to try to get corporations profitable again, and to get people back to work. You know, in theory, it sounded like it made a lot of sense, and they committed to it. The U.S. government committed to it. The Federal Reserve committed to it, and they got the desired effect. They got the Dow back up to 17,000, which is phenomenal, except the fact that not a lot of people are in the Dow. The general public that got wiped out back in 2008 and 9 doesn't have any money anymore. They lost their homes, they lost all their money, they lost their stock, and they lost their retirement funds. So who's in there now? It's the mutual funds, it's the hedge funds, it's the institutions. The small investor doesn't have any benefit out of the stock market anymore, and the unfortunate thing is that when they hear it in the newspaper every day, then it tempts the small investor to get back into the market, and they always buy at the top. Let's face it, the Dow at 17,000, if it wasn't for what the Federal Reserve did, the Dow would be under 10,000 right now, because the U.S. economy is pathetic. It's lethargic. It isn't going anywhere. The fact is that retailers are not doing any business. Walmart, which is the number one retailer in all of North America, is doing mediocre. In fact, so many Americans are now going to dollar stores because they can't even afford Walmart anymore. So the bottom line is that we're in big trouble. The economy is not stable. When you build a home or a building, it's always built on a strong foundation. If you don't have a strong foundation, that building is going to collapse. And that's exactly what we have right now. They never addressed the problems of 2008. They never addressed all the problems that the banks had. I mean, all of a sudden, does it occur to most people out there that all of a sudden, with the snap of a finger, all the banks that were going bankrupt, Citibank and Bank of America and everybody, all the banks that had to be bailed out or went under and got taken over by larger banks, those banks have never recovered, because the mortgage crisis was so gigantic that all the losses to the banks are still on the books. All they've done is keep on passing it backwards and backwards. They just haven't addressed it yet because the banks aren't even loaning out any money. So don't think that things have all of a sudden gotten fantastic here in the United States. It hasn't. In actual fact, that foundation, unfortunately, is about to crumble. I live in the United States. I'm a Canadian living in the United States for the last 32 years. I've got my wife and my kids and my grandkids and my businesses here. And the fact is that I don't want to see this economy go under. I love the lifestyle here, and I want to see people do well. That's why we do this radio show. But the fact is that everything that has been done to try to circumvent everything that happened back in 2008 and 9, everything that they tried has not had the desired effect. The unemployment numbers are still huge. The fact is that nobody trusts the unemployment numbers. Everybody knows that there's 15 to 20% unemployment in the United States, except it's an election year coming up again in November. And the fact is that they want these numbers to look strong. They say that there's been 10 million jobs created with the Obama government. That's not true. Most of those jobs are low-paying jobs or part-time jobs. That doesn't put a family back on track. When they were making $100,000 and now they're making $30,000, the fact is that their lifestyle will never, ever be the same. So the bottom line is that there's big trouble. The markets are going to fall again. I'm positive of that. If you have money in stocks and you're sitting at this level and you think you're going to make much more money in this move, you are in major danger. This market is about to crumble. There's too many factors out there that are going to make this market fall again. And again, if you're in your 50s, 60s, or 70s, you'll never, ever make that money back again. It's not the same market situation. The biggest fear right now is ISIS. There is no doubt about that. This ISIS group is way worse than Al-Qaeda. They're very well funded. There's much more of them. It's a very concerning situation. And just think about what 9/11 did. What happened to the marketplace? That's when, again, we saw major, major changes in all the world markets. If this ISIS group is as hateful as they appear, and obviously they beheaded 2 Americans. The last one, unfortunately, was from Florida, where I'm from, where I'm living. The fact is that everybody is up in arms at this point here, and a lot of people are saying that it's very possible that they're already here in the United States, and they've gotten in through Mexico like everybody else does. So this is a very concerning situation. You need protection. You need the type of assets in your portfolio that is going to protect you, because there's no doubt about it. We're going to wake up one morning and all hell is going to break loose. And then if you start to chase after the markets and do what you're supposed to be doing, it's going to be way too late, because the market moves are gigantic at that point. What you need to do is you need to consider what we're saying and what other people are saying that feel the same way as we do. There's many top analysts and brilliant analysts out there that feel exactly the same way as we do. And the fact is that there is a way that you can protect yourself and your family. Get some of your assets into hard assets, assets that you own, that are in your own possession, that you hold, that you own, that you can sell, that you can trade, that you can barter, that you can do anything that you need to do in order to protect your family and get on with life. And again, there is no doubt, and I mean no doubt in my mind whatsoever, that this is coming, and it's coming sooner than later. Now is the time to get yourself set up in the right way. It isn't always about making money. It's sometimes about protection. But in this particular case, if you own gold and you own silver and you own diamonds and those type of investments, they will just skyrocket when these moves come. When the stock market starts to fall, and the U.S. dollar, by the way, the U.S. dollar has rallied over the past month or so up to 83.5 cents, and gold has barely budged on the downside. The fact is that gold may be at 270, 280 right now, but the fact is that the U.S. dollar has actually increased by 3.5 cents over the last few months, and it hasn't had such a major effect on gold. What I do believe is going to happen is that we are going to see heavy inflation. There's no doubt that the Federal Reserve is going to have to start raising interest rates soon. But by doing that, it's going to kill the stock market rally and hurt whatever recovery is coming in real estate. So the fact is they're in a catch-22. they're probably going to have to print more money, and that's going to bring up the price of gold substantially. I'm saying at these levels, it's possible the gold could go lower than where it is right now. It could go back to 1180. But the bottom line is that we're buying and holding it. You're never going to buy the exact bottom of the market, and you're never going to sell at the exact top. You got to look for value. And if we feel the gold's going to go to 3,000 to 5,000, then gold at 1,300 or 1,280 is a fantastic buy, and that's where most of my money is going. Most of my money is in gold, silver, and diamonds, and that's where I'm comfortable, and that's where I have no problem sleeping. So, Randy, there is no doubt in my mind that we are heading for a very bad marketplace coming forward. And again, I'm hoping that I'm getting the message across at this point, because we're in a very, very heavy danger zone, and if your money is in paper assets, you're going to get hurt, and you're not going to make it back quick enough, for it to matter. So with everything happening right now and the scare of this ISIS group and what they could possibly bring forward, now's the time to get serious about owning assets that are going to preserve your equity and make you money moving forward, because let's face it, if you don't own assets, when inflation goes up that are asset related, that is inflation related like gold and diamonds, you're going to see your standard of living drop substantially. As food prices skyrocket and your income is less and less, that's what the true definition of inflation is. And ladies and gentlemen, that is here right now, and it's going to come in a big, big way. Now's the time to get prepared for it.
The most secure and profitable investment, millions of years in the making. Rare colored diamonds. RareColoredDiamonds.com is Harold's website. The telephone number to connect with Harold, speak with him personally and privately about investing in hard assets, 1-800-432-1022. 1-800-432-1022. Diamonds are nature's art, private, portable, stable wealth. Speak with Harold today about starting your own diamond investment portfolio and receive a free copy of our weekly World Financial Report on Radio newsletter. Get our newsletter today. If you're getting another newsletter, you're not getting the World Financial Report on Radio newsletter. You're not seeing the stories that Harold and I are talking about on the radio show. You're not reading the material that we are. If you're currently getting another newsletter from another source, sign up for the World Financial Report on Radio newsletter free of charge with Harold at RareColoredDiamonds.com, or call Harold and get your name on the list at 1-800-432-1022. Interesting news out this week about the stock market. Two experts warn a correction could total 60%. You heard right, 60%. Markets could soon face a fall up to 60%, and these two experts were on CNBC. A jolt to international confidence in central banks will lead to a 30 to 60% market decline, according to David Tice, president of Tice Capital and the founder of the Prudent Bear Fund. When this happens, he said, markets will face a period of extreme turmoil. This crash will be precipitated, he said, by the disillusionment with the Federal Reserve's confidence game, which will then see inflation rise and the Fed scramble to raise rates. At that point, Tice added, the Fed starts to lose control. Another market watcher also is calling for an impending fall. The Fed's low interest rates could bring a scary 50 to 60% market correction, according to technical analyst Abigail Doolittle. Unfortunately, I think it could come on as a crash, similar to what happened in 2007, according to Doolittle, the founder of Peak Theory's research. And both Doolittle and Tice very, very concerned about the stock market. In fact, she goes on to say that it's tough to know what the exact catalyst will be to bring it down, but that's the very nature of a big sell-off. They start slowly, and then they happen very suddenly. And there is a story out of the UK as well. The specter of a 1929 crash looms over the FTSE 100 as traders take on record debts. The specter of the 1929 stock market crash looms large for UK investors as traders now borrow record amounts to invest in rising stock markets. Nothing has been learnt, as they say, from Britain, from the madness of 1929 stock market crashes, as once again traders reach for record amounts of debts to pile into rising share prices. The level of margin debt that traders are using to buy shares in the stock market reached the highest level on record, according to the latest data from the New York Stock Exchange. U.S. traders borrowed $460 billion from banks and financial institutions to back shares, and once cash and credit balances held in margin accounts of $278 billion is subtracted, this left net margin debt of $182 billion in July. Traders are now more exposed to a fall in share prices than at the height of the dot-com bubble at the turn of the century, just before the financial crisis during the 2007 peak. And it's interesting to note, we have this in our newsletter. We have those stories we just talked about in our newsletter, as well as a quote from David Tice. Gold prices will go far above $3,000 an ounce in the not-too-distant future. I've never been more confident of anything in my life. As well, Egon von Greyers out of Switzerland, an advocate for having gold in a portfolio. The amount of paper gold outstanding is so large, and once people start to distrust the system and they start to understand that Western central banks have no gold or very little gold left, and the bullion banks likewise, then the 100-to-1 ratio of paper to physical gold will lead to a massive short covering. And it's also interesting to note that Bill Holder came out this week and said, I believe that many things that are real, meaning hard assets, real assets, will be revalued many multiples higher. Silver and gold, I believe, will be revalued 8 to 10 times higher or more if we have a closure of the banking system and the stock market, a reset, so to speak. Harold, we have about a minute left, but interesting to hear from Tice and Doolittle saying we could have a major pullback in the U.S. and worldwide stock markets of around anywhere 30 to 60%. And obviously that would have devastating consequences for a lot of investors. Oh,
there's no doubt. And again, we've seen that in the past. And as I mentioned at the beginning part of the show, we have never addressed what the real concerns are. So the structure, the foundation for what they've rebuilt in the investment aspect of the market isn't there. It's like a house of cards that's going to crumble. What's happening in the States, was only done out of desperation, and they didn't have the time to do this correctly. So the banks have not gotten into good shape, and the only place that's doing well in America is Wall Street, and that's a very small area when you think about everything else that's going on. So again, I agree with Tice, and I agree obviously with what's going on, because we've been preaching that for all this time, and it's just about to break, Randy. There's no doubt in my mind that we're going to wake up in the very, very near future and see some of these situations in effect at that point.
Speak with Harold today about investing in hard assets. Go to rarecoloreddiamonds.com and take a look at the investment diamonds that he has. As well, speak with Harold personally and privately at 1-800-432-1022, 1-800-432-1022. RareColoredDiamonds.com is his website. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on September 4th, 2014. Our time is 9:14 Mountain. Our radio show runs on your favorite radio stations, 6:30 CHED in Edmonton, 3 in the afternoon on Sundays. You can also catch us if you miss a show streaming online at HESradio.com, RareColoredDiamonds.com. We have a podcast. The show is portable. We go anywhere you do via your portable device. Just have iTunes on your portable device. Type in the World Financial Report on Radio and subscribe to the podcast. It will come in every week for your listening pleasure. Now more than ever, you need to educate yourself as to what's happening in the financial markets. Also, get our free weekly newsletter. If you're getting a newsletter other than the World Financial Report on radio, you're not getting our newsletter, the companion to our radio show. You're not seeing the stories that Harold and I are reading every week, the stories that we're talking about on the radio show. We encourage you to get your name on the list for our free weekly newsletter. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or 1-800-432-1022. Get your name on the list for our free weekly newsletter today. This week, our featured diamond is from Rare Colored Diamonds, a .30 carat radiant cut, fancy, vivid, purplish pink argyle. It is absolutely stunning. An amazing, amazing color on this diamond, Harold, and people can go to rarecoloreddiamonds.com, click on Featured Diamond of the Week, see the video of it. We have a picture of it in our newsletter. It is absolutely gorgeous. One of the most beautiful cuts I think I've seen on a diamond, and at the same time, the color is very rich, a very rich, chunky, thick diamond. Very, very beautiful.
Oh, boy, is it ever. And one of the best investment diamonds you could buy because the color of it is so vivid. And what makes the price of diamonds more expensive is the saturation of color, how deep the color is. So in the colored diamond market, vivid is the highest color grade given by GIA, the Gemological Institute of America, and consequently those diamonds go up more than any other diamond. That particular diamond is just spectacular. The color is great, and that diamond will double in value every 2.5 years. The closer we get to the mine closing down, which means it comes from the Argyle mine in Western Australia, the mine is going to close before 2020. They produce 95% of the pink diamonds in the world, and these diamonds can go up 10 times what the prices are right now. So, again, we're expecting that the Argyle pink diamonds will be the biggest return per investment of any investment out there, and basically these prices never decline because there's hardly any of them. The fact is that the Argyle mine in Western Australia produces 95% of the world's pink diamonds, and basically if you take the whole year's supply, put it into a champagne flute, it doesn't even fill the glass. That's how rare and how small that marketplace is. Just think about it, though, in terms of a commodity, a very, very important commodity. The fact is that when almost all of those diamonds are produced in one mine, and that mine is now exhausted, it's going to close down, that means that there will not be any more of that commodity. The prices will skyrocket. And that's exactly what's happening now. But the biggest moves are going to come the closer we get to the mine closing down. It's only human nature that people wait till the end. But I'm saying do it 6 years before. We've got 6 years for this mine to close down, and then you're going to see returns on investment like you've never seen before. And these are beautiful, concentrated forms of wealth. You can put them in jewelry. We do that for you. And wear it, enjoy it, give it back to us in 10 years, and let us sell it at a profit for you. We own our own secondary market. We own 8 Siegel Fine Auctions, which is a virtual auction business that resells our clients' diamonds, and we get 10% of the profit. So if our clients don't profit, we don't profit. But I can assure you, I've been in the investment business 35 years. I know this market very well. During times of high inflation, diamonds do better than gold does. Back in 1980, you could have bought a 1-carat yellow flawless diamond for $500 a carat. Today, they're $20,000 a carat between 1980 and now. You may say, that's 24 years, 34 years. But the bottom line is, from $500 to $20,000. The fact is that most people that have a retirement savings plan put them away for 10, 20, 30 years. If you have your money sitting in mutual funds or in stocks in your 401k, in your retirement savings plan, you're going to find that as the market fell like it did in 2008 and 9, it wiped out almost everybody's retirement savings plan and their personal stock portfolios. So in the longer term, if you keep your money in the stock market for retirement purposes, and just look at the last 10 or 15 years. 1999, the market plummeted. 2008, the market plummeted. It took all this time for the market to get, back up of about 14,000. It's at 17,000 now, and now some analysts are predicting it's going to go back down in the range of about 7,000 or 8,000. And I believe that that is going to happen. So the bottom line is that you need to own assets that don't have that type of volatility that you're not going to lose all your money out. And basically, gold will always have value to it, but stocks won't. If a company goes out of business, that stock goes to zero, but that's never going to happen in gold, because even during the worst of times, when gold was not needed as an investment back in the 90s when the U.S. dollar was strong, the economy was strong, and so was the stock market, gold was at 250. But now look where gold went to. It went to 1,900 for all the right reasons, and that's going to happen again. So my strongest suggestion is to get into the alternative asset market, the hard asset market. Just look what's happening in art. Look what's happening in diamonds at auction. Look what's happening with gold. All these assets are important assets that you should own. And we're saying that the diamond market is one of the best investments you could make because it always holds its value. If you buy the right diamonds, they've never declined in value. Certain diamonds will go up by 15% a year, like yellow flawless diamonds. The diamonds that we carry from South Africa never decline in value because there's so few of them. They increase by about 15% a year. So if you're a very conservative investor and you take $20,000 and buy a yellow flawless diamond, we ship it directly to you so you own it outright. You put that in a safety deposit box for the next 10 years, and at that point that diamond is worth somewhere around $75,000. You invested 20, and in 10 years that investment is now worth $75,000. If you took that same $20,000 and put it into the stock market, God knows what you would have back on it. Possibly nothing, possibly losses, possibly small gains. But again, it's undetermined because that's speculation. You're speculating that the economy is going to do well enough for the stock market to go up. But that's not the case with diamonds. Diamonds are so rare, it takes 100,000 carats of white diamonds to find one colored diamond, and it doesn't mean that that colored diamond is an investment quality diamond because there's a lot of colored diamonds that are not investment quality. In fact, out of 30 million carats that come out of the Argyle mine every year, where these pink diamonds come from, most of those are white industrial diamonds. In fact, out of that entire mine of 30 million carats, only 2% are investment quality diamonds. How crazy is that? 2% turns out to be investment quality. That's how rare these diamonds are. To get a pink diamond today is extremely rare, but to get a pink diamond in 10 years from now will be nearly impossible. And the wealthy, which there's many, there's way more wealthy people right now than there's ever been in history before, and these are the type of assets that they're buying. Best example of that I can give you is that I've been on Bloomberg Financial 4 times now within the last year, and just recently, about a week and a half, 2 weeks ago, on Fox Business News. I've been interviewed here in Aspen, where I spent 4 months, on a local grassroots television show that I must have been stopped by at least 30 people in town telling me that they loved the presentation on gold and diamonds. So the fact is that if there wasn't an interest for this, these major publications, these major media sources would not have me on there. But I've been on 5 times between Fox and Bloomberg over the last year. Anytime something happens in these alternative markets, they call us. We've been in business the longest. We have the secondary market that resells diamonds that no other company has. We raise money for charity. I raise money for the Susan G. Komen Breast Cancer Charity. And coming up in March, we're doing a major auction for the Girl Scouts of America, Hillary Clinton, those Gwyneth Paltrow, those type of women that all belong to these organizations are all starting to understand the importance of raising money, and they've chosen our virtual auction business in which to do so. Obviously, I'm extremely proud of that, but again, this is what it was used for. It's needed as a secondary market to resell these amazing assets, and again, we're using it for good, not evil, but good, to raise money for charity. So this next coming couple years is going to be tremendous for my business as it continues to grow in the alternative asset market. On top of that, for the last 3 or 4 weeks, I've been putting a deal together to get our clients physical gold and silver. And what I'm trying to do is close the deal, but with this Ebola virus that has gone ballistic in Africa, and realizing that most of the gold comes from Africa, we're hesitant to bring anything out of into the country from Africa at this particular point. So the bottom line is that deal is almost done. We're going to be able to bring physical gold, coins, bars, those type of things at spot prices. We're not going to make commissions. We're not going to charge spreads. There's not going to be any storage. It's going to be delivered directly to you. And we're doing this because of the importance of owning hard assets, and we want to make certain that our clients don't get ripped off. If you look at where silver is available, it's available $2 above the spot price. Well, we're going to be able to bring it to our clients at spot price because we want you to be able to make money. Just picture this, buying gold at $1,300 and at $1,301 you're already in profits. So that's what we're working on. It's almost finished. The only delay has been the situation bringing in things from Africa, and that Ebola virus is spread to such a severe amount that they're saying that over 20,000 people are affected by it at this point, and a lot of the medicines that they have for it are not working. So we're heading into a very scary time. These are not good times. These are concerning times. Again, I'm not here to scare you in any way, but if you don't look at this in a concerning fashion, then I think that you're missing the boat here. ISIS is worse than Al-Qaeda, and we know what Al-Qaeda did. They've got this tremendous hatred. And because the U.S. went into Iraq and did what they did, it's only antagonizing them even more. If they are here in the United States, and if these stories are true that they've actually hijacked and owned 11 airliners, we know what happened in 2008. During 9/11. And this is what the major scare is. I'm not looking at this as a money-making opportunity. I would never do that. This is something that sickens me and is so frightening and concerning. However, we're not going to roll over and die. We have to protect ourselves. We have to protect ourselves financially. And my 35 years in the business tells me that if this is going to happen, I better own the right type of assets, and the type of assets that history has proven over time that will protect me and protect my friends and clients and family against what's oncoming. So that's what we're doing. We're buying gold, we're buying silver, we're keeping it on us, we're taking it with us, and we're buying diamonds because diamonds are portable private wealth. Nobody knows you own them. The government doesn't know you own them. Nobody knows you own them, and they never decline in value. Randy, that's the route that we have to go at this point because the situations dictate exactly what we need to do, and we're proactive here. It's not that we have any control over what ISIS or the Federal Reserve or anybody does. All we can do is control what we do, and my 35 years in the business tells me to get out of stocks and get into hard assets, and you better do it now because this onslaught of what's happening is coming our way, and we need to do it now before, not after. We need to be proactive, and that's the most important thing at this time.
True. Proactive, not reactive.
Exactly.
We are in a position today to get with our money, obviously have some of it allocated to insurance. Insurance in a portfolio, that's hard assets. As we talked about on a past show, you want to have the fire insurance in place before the fire, not after. That's why we advocate having hard assets in a portfolio at all times. The most secure and profitable investment, millions of years in the making, rare colored diamonds. And it was back in 2005, Harold brought to our attention via a report that he wrote in August of that year, Naturally Fancy Colored Diamonds, the Best Kept Secret. And here we are 9 years later. RareColoredDiamonds.com is a world-famous website where we have some of the greatest investment diamonds in the world. And Harold has been interviewed by many, many major news organizations. And back 9 years ago, who would have guessed 8-9 years ago that all of these things would have been as successful as they were? We thought they would do well, but it's even beyond anything that we expected. Diamonds, they're nature's art. They're private, portable, stable wealth. Speak with Harold today about starting your own diamond investment portfolio. Receive a free copy of our weekly World Financial Report on Radio newsletter. Connect with Harold at RareColoredDiamonds.com, RareColoredDiamonds.com, or speak with him personally and privately at 1-800-432-1022. That's 1-800-432-1022. Our featured diamond of the week, and I have a story here that goes along with our featured diamond, is a .30 carat radiant cut, fancy, vivid, purplish pink argyle. You can see it at rarecoloreddiamonds.com. You can see a picture of it in our free weekly newsletter. Now, a flawless pink diamond is going to lead Sotheby's Hong Kong auction. Sotheby's will auction, get this, a rare purple pink diamond with a pre-sale estimate of between $12.8 million and $15.4 million at its upcoming Magnificent Jewels and Jade auction to be held October the 7th. The 8.41 carat internally flawless, pear-shaped, fancy, vivid purple-pink diamond was cut in New York from a 19.54 carat rough diamond mined by De Beers. It's eternally flawless. Clarity is extremely rare in pink diamonds, while its fancy, vivid color grading is the highest color grading given by the GIA. The diamond will be viewed in Singapore, Taipei, New York, London, Geneva, Hong Kong prior to the auction. This is one of the most beautiful and concentrated shades of pink in diamonds that I have seen. Together with its exceptional clarity, it's not surprising that it would command the highest price per carat estimate for any pink to date, that according to Kwek Chin Yao, the chairman of Sotheby's International Jewelry Business in Asia. The current record price ever paid at auction for a diamond or gemstone is the Graph Pink, a 24.76 carat fancy intense pink diamond purchased by Lawrence Graph at Sotheby's in November 2010 for $46.2 million or $1.86 million per carat. According to the auction house, the current record price per carat for a fancy vivid pink is $2.15 million per carat, set by a 5 carat diamond, and that was sold in Hong Kong in January 2009 for $10.8 million. Our featured diamond, 0.30 carat radiant cut, fancy vivid purplish pink argyle. They have on sale a purplish pink argyle. It is the pièce de résistance of this Sotheby's auction in Hong Kong. Harold, for those that would like to invest and obviously be involved in this market and take a look at a vivid purplish pink without having to go to an auction, you're the person to talk to. We have the diamond for them.
You bet, Randy. And, the beautiful thing is that these diamonds that are now selling for these astronomical prices, and by the way, they do sell, the fact is that they were bought many, many, many years ago for way, way less than what they're selling for now. To give an example, my wife's girlfriend inherited a 5-carat pink diamond ring from her grandmother. The story is that her grandmother bought the ring 50 years ago for $50,000, and the diamond ring today is worth upwards of $4 to $5 million. There's so many cases of that. When I was just interviewed on Fox News, Deidre Bolton brought up the fact that there was an orange diamond that sold. We remember it from last year, but it sold for a record price. We know that diamond was originally bought as a rough for $2 million. It ended up selling for $35 million. So, people may sit back and say, well, if I pay $50,000 or $100,000 for a diamond, how much could it go up? Percentage-wise, it's going to go up as much as any major diamond, probably more. In fact, if you look at the results from Christie's and Sotheby's, the fact is it's these middle-priced diamonds, the $50,000, $100,000, $200,000 diamonds, that go up the most. Look at what Elizabeth Taylor's pieces did in 2011. A brooch that was supposed to sell for $80,000 sold for $800,000. That's not a mistake on Christie's part. It's the market. It's what people are demanding. And I've got the last 8 pieces of Elizabeth Taylor's estate, and it's one of the greatest investments I've ever made. And basically, I buy these and offer them to our clients so we can resell them down the road. You can enjoy them. You can make a lot of money with them. You can hand them down from generation to generation. You can give them to your kids or grandkids, or you can use them for retirement, which most of my clients do. But the fact is that every day there's another situation where somebody has bought a diamond for X and sold it for 10 times X, 10, 15, 20 years down the road. It's a great investment if you're in your 20s, 30s, and 40s, and it'll do way, way better than a retirement savings plan will, and obviously is much more rare and much more beautiful.
RareColoredDiamonds.com. Our featured diamond of the week, a .30 carat radiant cut, fancy, vivid, purplish pink argyle, Speak with Harold about starting your own investment portfolio of diamonds today. I know that someone had said to me recently that really the only reason people invest in diamonds is to make money. And for me personally, I don't really believe that's the case. For some people, maybe it is. But I've seen something different, and we've talked about it on the show before. It's not just about investments or money. When you have Harold's wife, Harriet Siegel, wearing some of the world's rarest diamonds from rarecoloreddiamonds.com in their vaults, going to different charity events and parties, wearing these diamonds, walking through the doors and being mobbed by people wanting to meet her, wanting to know who she is, asking her about diamonds, the local media taking pictures of her, we know that diamonds, there's more than an investment factor. When we had a few years ago our seminar at West Edmonton Mall, there were ladies there who had rings that Harold had put together for them, and they were the star of the show. I remember a group of people gathering around a young woman who had gotten a diamond from her significant other, and everyone was looking at it and oohing and awing. She was the star of the show. And when you walk into a room with rare-colored diamonds on you, is it an investment? Yes. But there's something that you can't put a price tag on, and that is the feeling you get when people see you wearing the rarest of the rare, the best of the best. And Harold, as your wife knows, it's an incredible feeling.
It is. And you know something, I don't want people to think that we're, born with a silver spoon in our mouth or whatever. This didn't happen. When my wife and I got married 32 years ago, we basically had very little. We started with really nothing. So, the diamond business is a good business, but it's a matter of doing the right thing, and it's a matter of, being in the game and doing the right thing and having the guts to build a business, and that's exactly what we did. If my wife walked into a room wearing Elizabeth Taylor's necklace and another woman walked into a room wearing IBM stock around her neck, I guarantee you
right.
that the diamonds are going to get a lot more action than the IBM stock. So again, every asset has its own benefits. Again, people have a comfort level investing in stocks and real estate, and I certainly understand that. The bottom line is that as the economy changes, as time changes and they dictate other things, you've got to be open-minded in order to be able to stay in the game. Because this time, if the Dow falls again, which we totally believe it will, and it wipes everybody out again, the chance of making back your money are slim to none. Be diversified. If you have to have money in stocks and bonds and those type of things for tax reasons or just your overall portfolio, that's a decision you make. But make certain that you have something in there, as Randy always talks about, insurance, fire insurance, home insurance, car insurance, life insurance. We have insurance on everything. Shouldn't we have insurance on our financial well-being? Because if the markets fall again, if ISIS comes in, if any of these situations hit, it's going to be too late. Now's the time to do it. We're able to bring to you the best investment diamonds starting at $20,000 going up to over $40 to $50 million. But most of our clients are hardworking, everyday people, families that will spend $20,000 to $100,000 to $250,000 on a diamond. You do not have to spend millions to do well in the diamond market. And very, very soon, as soon as these situations clear up in Africa, we are bringing to you physical gold, and we're going to sell it to you with no commissions, no spreads. We're going to be able to sell it at spot prices because we want to make certain that the listeners to our show, our clients and our friends, get through these difficult times and actually do well, not end up losing all their money.
Well, and as we like to joke, Harold, usually as quick as Harriet's putting the jewelry on, you have sold it off of her.
Oh, you better believe it. We've gone out for dinner with clients, and she'd be wearing a 2-carat pink or a 10-carat yellow, and it would be gone by the end of the night. She'd be walking home with no jewelry. So,
there you go.
The fact is that it's just that type of asset, and let's face it, making money is one thing, enjoying what you have is another, and to put a beautiful ring or a necklace on your wife's finger or neck, is just something that makes us feel good. And if it turns out to be a great investment, that's even better.
Thank you very much, Harold Siegel.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very, very profitable day.
Get our free weekly newsletter, 2 Experts Warning, David Tice, also Abigail Doolittle. We could see a pullback in the stock market of up to 60%. Tice saying He believes gold is going to $3,000 an ounce in the not-too-distant future. Get our newsletter from rarecoloreddiamonds.com or speak personally and privately with Harold about investing in hard assets at 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.